right, cool. We're just gonna go ahead and get right into it, Ash. All right, what is up, Ashley Horton? Thank you so much for agreeing to hop on this little collaboration series that I got going on here. And how are you doing today?
Doing good. Can't complain.
Nice.
Got to celebrate the new year. Had a good
nice.
And,
I love it. Well, we will just go ahead and jump right in it. And I wanted to pick your brain about VA loans. First and foremost, you are a veteran, right? So thank you for your service. And I figured who best to, to help kind of do some of these VA loan questions with other than you. So I just figured I'd give you a holler and once again, thanks for joining. And just a couple questions. We work together quite often with borrowers, and you do have a pretty extensive reach in the in your community with the veterans and things of that nature. So, I wanted to ask you a couple questions about things that you get commonly asked when it comes to VA loans. And so we'll just kind of have like an open dialogue here about, when things come up, we can, interject and things like that, right? But so a couple of things that we were discussing earlier is when it comes to, you have clients that reach out to you for VA loans, right? You said some of the common questions are, hey, VA loans, I don't have to pay any money whatsoever. It's 100% financing. It's 100%, for the VA entitlement. So go ahead and give me a little bit of, when you do get asked that question, how do you answer it?
Yeah. So I think first and foremost is whether you've used a VA loan before or not, is understanding what it is and who's eligible. And it is specifically the veteran. If you're married, that's the only way a spouse would be eligible to use it in conjunction with the veteran himself. But the veterans the loans for the veteran only. But with regards to closing costs, a lot of veterans that don't understand the program or haven't used it think that everything is paid for by the VA, which is a common misconception. And that yes, the purchase amount of the home, so long as it appraises at value, that's 100% financed by the VA. But there is a thing such as closing costs. If you've never had to pay closing costs, that is money that you do have to bring to the table that the VA does not cover. And this includes things like home inspections, your lender fees, your title, the attorney fees, all those other things. And in North Carolina, on average, your closing costs are going to be about 2 to 3% of your purchase price. And that's dependent on the purchase price. So when I have these upfront conversations with my veterans, we have a real honest conversation about what do you have saved, what do we need to save, and then we make sure that those closing costs and cash available is factored into the offer we make, so we're not financially crippling our community members on these.
So that 100% financing or the 100% VA loan, that is 100% of the purchase price. So yeah, and that's we do get asked that. I know that you get asked that quite a bit because you'll call me and we have to have that sometimes tough conversation that you have to come to the table with closing costs. And so another thing that me and you kind of have done together, and I know you've worked with some team members of in here about, let's say they do have cash, let's say they do have some cash to put aside for the closing costs, but they don't want to use that cash. What are some of the ways that we've worked with together to kind of not have to, so they can kind of keep that cash and use, basically kind of structure it to where we're using like an interest rate increase to pay for that, because we really helped out a client in need that that we got them a substantial credit. And so just kind of give us a little bit of insight on how we we worked on that together.
Yeah, so one of the biggest benefits, and again, you mentioned that we've done this personally, is the relationship that we as agents have with our lenders. And the priority with the client, whether it's saving cash, needing cash, there is an option with the VA that is obviously buyer dependent, where a buyer can accept a higher interest rate to get credits from the VA, which can be applied towards closing costs. Now, this is not going to be something that's for everybody, but if it benefits and achieves the ultimate goal and helps the buyer out, this may be something they're willing to consider. And it is something that would be very specific to the buyer that, you guys and my buyers would work out to figure how much of a credit they can get based on the purchase price and what that can be applied towards and what it cannot be applied towards. So that
Yeah, and
benefit
that's,
we have
not many
covered.
people realize that you can do that. And so if it, and of course, as you were saying, in certain circumstances, it may make sense to do that, right? In some circumstances, it may not make sense to do that. So it's all, it's just taking that whole approach of, and once again, thank you for being such an awesome, partner when it comes to that. We can both kind of tag team the clients to figure out what the best solution is for them when it comes to structuring, a certain VA, loan or whatever loan that is really, to help them with,
Yeah, understanding how to
Yeah.
structure it is a really big deal, and you guys have been phenomenal in helping me with that, with clients and different needs. They've all been incredibly unique, VA or not, and we have shown our VA buyers and sellers that they do have more options than what they realized were available to them, which has made them incredibly
Nice.
advantageous in the
Yes,
market.
and thank you for being awesome. And then, so here's a question too that I know we've kind of run into is, can somebody that has a VA, can they purchase a second home with that VA entitlement?
This can be answered a couple different ways. So if they're looking to buy an investment loan or a second home, like a vacation home, no. VA loan is for primary residence
Correct.
purchases only. Now, buyers and sellers, this goes two ways. If you are buying and you are looking to keep and you bought with a VA loan and you want to keep that VA loan on that home and then buy another home to live in as a primary residence but maintain your original home, you can do that. Now, this is a lot more lender speak than I'm qualified for, and this is a conversation that warrants its own chat, but you may have to come to the table with a certain down payment to pay a difference if you keep your original VA loan and don't refinance it, but you can buy another home as a primary residence for you to live in. But also, sellers, if you choose to sell your home that has your VA loan, you'll work with your lender for your purchase to reinstate what's called your certificate of eligibility, or you might hear COE, and that will get you 100% of your VA loan benefits back as well. So you can use that VA loan as many times as you want with regards to second, third, fourth home purchases. You just cannot use the VA loan for investment and vacation, second home purchases like rental property.
And when it comes to the VA loan certificate of eligibility, and what their entitlement is and what they've used and not used, and that is a really it's a calculation that we need to do on our end. It's not, it's not like, cut and dry. There's a multiplier and a divider and this, that, and the other. So we really got to kind of, 100%.
It's definitely worth a one-on-one consultation.
100%.
That's where like that individual conversation needs to come into play. It's a good information to have out there and start the conversation, but to really determine what each person is entitled to and what they can do, that is a very individual conversation.
And then another big thing that we've run into with VA, of course it doesn't happen all the time, but we do see it, where an appraisal, appraisals are different with VA. I actually like the way that VA does that we have to go through the appraisal process. They're quicker, in my opinion. VA appraisals are much more efficient than conventional appraisals, and we can actually, communicate with the VA appraiser when it comes to like scheduling and things like that. So where there's not so much of a disconnect when it comes to conventional loans, and also with VA appraisals, there's such a thing that's called Tidewater. And Tidewater, because that basically deals with both myself and you, the agent, because we get notified right before they send the appraisal in. They're going to give us notification. If for some reason that appraisal doesn't come in at value, it's called Tidewater. And so I'll let you kind of continue that conversation about, because we work together in unison with Tidewater and how that kind of is a little bit more beneficial than a conventional loan where they'll just send the appraisal in and we have to then fight it from there versus, the way that the VA inspections work when it comes to the appraisals.
Yeah. So Tidewater, this is something that buyer sellers, it's good to know about because this is one distinct advantage that only the VA loan has over conventional FHA, USDA, but also other agents. If you don't understand or know about Tidewater, this is a dialogue I want you to have with Angelo and I. This is so important and so useful to you. So what Tidewater is if the purchase price is one price and the appraisal comes in below value, you can use Tidewater to negotiate a 50% reduction in the appraisal. So if the purchase price is one price and the appraisal comes in below value, you can use Tidewater to negotiate a 50% reduction in the appraisal. So if the purchase price is one price and the appraisal comes in below value, So long as you, the buyer and seller's agent, have done your comps and you can prove that where you got this offer price from, you work together in conjunction with the lender to provide your comps and your breakdown of how you got to that value. And you actually have 3 business days to submit that to the appraiser directly. What can then happen is the appraiser can review your findings and they can actually decide, you know what, hey, I appraised it low, but this justifies it, and they can actually increase their appraisal to value and sometimes even higher, which I've had happen in the past. Thankfully, I've only had to do Tidewater twice. My comps are solid, but it's the benefit. So there is a huge benefit to you, the seller's agent and the buyer's agent, because if it comes in low, it's behoove you as a seller's agent to represent your sellers and provide those comps, and the buyer's agent to support your buyers to get that 100% financing. You do want to work together and fight for this. And appraisers with the VA are actually pretty reasonable if you're willing to back it with sufficient evidence. So that's a really, really big advantage for the VA loan.
There's been, I mean, we've had, gosh, I can't count how many times we've had, you know, it's an awesome process. In my opinion, it's an awesome process that we get to open that line of discussion before the appraisal is done and completed and handed, because 9 times out of 10, appraisers are not going to change their opinion once the appraisal is completed and it's sent in. We have the luxury with VA to create a picture, right? To put together our comparable sales, you know, with the selling agent, with the buyer's agent, say, hey, you know what? We don't get to actually see the value, right? They tell us what the number is, or I forget what it actually is. The last one, I forget if it's, they tell us, they notify us, and they notify us of Tidewater that's going to come in low. And then we have, you know, like you said, 3 days to go ahead and get that back to the appraiser for that information to then make that decision. Because once he makes that final decision, that's pretty much set in stone, not going to change. It gets logged with the VA portal, what that value is, and there's no getting around it. There's no switching lenders, because with conventional, if you get a bad appraisal, you know, you can, you know, basically lender shop or appraisal shop with, you know, submitting it to a different lender, which is not, you know, it's definitely frowned upon. I don't like doing that, but sometimes you just have an appraiser that won't change his stance, you know, but with VA, that's it. You know, it's logged. So when you know, then that's great with working with yourself. When we make that initial offer, you've done your homework in knowing, you know, pretty much what that appraiser is going to come in at, and you have the comparables to back it up. So if we do get, you know, hit with Tidewater, we kind of have them ready to say, hey, I don't think this is right. We send it in. Of course, we do our best job, right? You do your best job, and the appraiser, you know, they'll review that information and they'll deem, you know, yes or no. But we have that ability to basically combat that that Tidewater before the appraisal is actually finalized, which I think is a huge benefit to VA appraiser versus you know, versus conventional. Now, let's talk about the elephant in the room, right? A VA loan. When, and I can't stand it, you can't stand it. I know we've talked about it ad nauseum when it comes to this, but when you have, you know, 4 or 5 offers on the table, you have conventional offers and you have a VA offer, that listing agent doesn't even want to deal with the VA offer. They want to go deal with conventional. And we can just, I'll just go ahead and I'll dish that to you to see how do you feel about that? When, you know, when you have a solid VA buyer, but the listing agent, you know, how do you try to combat that when a listing agent tries to, you know, basically say, well, it's a VA loan, I'm not going to, you know, it's either a bad borrower, or because it's a VA loan, it's going to be harder to get approved, yada, yada, yada. So I'll let you kind of speak on that for a few seconds.
Well, first and foremost, I'm always going to make sure that the selling agent knows that it is the seller's choice and decision. And are they speaking for their seller, or was it their seller saying they are declining a VA loan? And have they been educated on it? And if I have the opportunity to present the information we're talking about to help credit assurances connect you with them, I will. But making sure it's the seller speaking and not the agent, which unfortunately happens a lot, is a very big deal. So sellers, you have a voice. Second, unfortunately, there's an old stereotype that VA loans are lesser than, they're harder to work with. Oh, the inspection. And inspection is being blanketed in that statement. They think a home inspection and an appraisal inspection are the same, and it's not. And the impact they have are very different, good, but different. And it's just a lot of poor education, misinformation, or lack of experience and knowledge about the VA loan and what that means. VA loans are actually much easier to work with. The only big difference is the appraisal inspection from a conventional loan. FHA has an appraisal inspection requirement too. And it's common sense stuff. It's not a home inspection. You're not required to get a home inspection for a VA loan. Appraisal inspection, you are. And they look for things that are basically health and safety issues. So is it broken glass, cracks in the ceiling, leaky, like leak spots in the ceiling, flooring coming up, siding falling off the
exposed
house,
electrical
doors
and things like
hinges,
that. Yeah.
things that, if you walk in as an agent and a buyer, you're going to look for these things anyway if you know this, because if you walk into a house that needs to be completely gutted, you know right off the bat a VA appraisal is not going to happen, so you're not even going to try. Why waste your time and energy? You're going to be looking for these things before you even make an offer, and they're common sense things. And the other thing is too is sellers and buyers think, well, if it doesn't appraise, I don't get the loan. Not true. And if the appraisal inspection comes back and says, hey, this needs to be addressed, it doesn't mean you don't get the loan. The appraiser gives you and the seller the opportunity to work together to, patch up something that needs repaired, and then they'll come out and finish the appraisal. You can still get the loan. It just might be like, hey, this one thing. And again, it's common health and safety issues. So sellers, when you're prepping, whether you're considering VA or not, just do your due diligence and take care of the house that any buyer would want to see is handled correctly. And then buyers, you can work with sellers on it. It's not
all good points. Yeah, and it just, it kind of infuriates me when, I'm working with a VA buyer. Look, they serve our country, right? They should be actually put at the top of the list, right? In my opinion, they should be at the top of the list when you're at, when you have a VA, a veteran wanting to purchase a property. So a very, very common old school ignorant stereotype when it comes to VA loans. Well, if the house was built in 1920, okay, I got it, right? But if you're looking at a brand new property, all things being equal, loans when it comes to property wise, it kind of baffles me why VA loans they just get kind of pushed to the side.
Yeah.
So anyways, but I appreciate your time, Ash. I know we've kind of been out here probably around 15 minutes or so, 10-15, but I just want to say thank you so much for hopping on this call with me, this little collaboration. And any other side comments before we get we kind of jump off here?
I could talk about the VA loan day. So if anybody has questions about anything we've said, they want to see another post about it, or if they want to have a private conversation, please reach out to either of us, just because this is a very extensive subject. It's not complicated. It's just information that a lot of people don't entirely know. So if there's more anybody wants to talk about, please let us know. And I'm happy to do the consult in conjunction with you, one-on-one, whatever.
Awesome. Well, all right, Ash, I appreciate you. Thanks for hopping on this with me, and then we will do this again. This was fun. Okay.
Sounds good.
Bye-bye.
I appreciate it. Bye.